Joining us now to discuss Bitcoin and more is Nick Mancini, research analyst at TradeTheChain.com. Hey, Nick, thanks for joining us. So you guys specialize in sentiment indicators. Have you been seeing this bullish sentiment in Bitcoin for a long time? And what do you believe is the catalyst behind today's surge?
Yes, thank you so much for having me. Great to be here. I think the biggest thing, probably the biggest data point for sentiment that we noticed actually happened late last week when price was dipping into the 40K range for Bitcoin. Sentiment actually began to pick up in kind of large numbers, much larger than we typically see in a normal kind of support area. So that was the first signal, especially after a triple bottom, technically, to see sentiment rise at a really core support level. So that was shocking to us. And obviously we got a big boost kind of going into the weekend and coming into the week. And then I think the big kind of boost that happened recently that you just discussed with the previous guest was certainly due to the Fed and the SEC chairs both signaling that a ban for crypto and stablecoins would not be happening, at least under their purview, and it would take likely an act of Congress to make it happen. So great sentiment coupled with a big support kind of bounce, coupled with great kind of regulatory head or winds coming into the market, definitely equals higher Bitcoin prices and kind of inching closer to 60K, which was close to previous all-time highs.
Also, I mentioned that there is a lot of anticipation, if you will, of a pending or potentially pending Bitcoin ETF approval. Do you have any indicators on that and what the feeling is?
Certainly. So I think the biggest tell for us was when the spot ETF news came out, sentiment did not drop. So just recently, we got the news that I think 4 spot ETFs got pushed back, I think another few weeks or maybe a month or so. So generally, when that has happened, sentiment dips. We barely saw a blip on the radar for that because I think the market is slowly realizing that a catalyst is coming for an ETF announcement. And it does not seem, based on the signaling that we've gotten from our financial leaders, that a spot ETF would be approved. It does seem a lot more likely that a futures ETF will be approved, although this is still up in the air. So the fact that the sentiment around the futures ETF is high definitely knocked off the impact that a spot futures push had. So I think that's generally good news when we're seeing news that typically impacts sentiment and price, really not impacting it that much. That's definitely positive.
I wonder when Facebook went down along with Instagram and WhatsApp, that created a lot of stir in the crypto community in terms of building a case for the need for a decentralized web. And I wonder if you saw any sentiment indicators relevant to that developing story.
So I think the biggest sentiment indicator that I saw from that is Twitter volume increased pretty much almost instantaneously with the Facebook and Instagram and WhatsApp kind of pause or shut down, whatever you want to call it. So Twitter is where a lot of sentiment activity happens. It's where a lot of alpha gets shared in the markets, whether you're talking about crypto or equities. So the fact that social media sites where a large swath of communication happens around the globe was cut off, we saw a lot of it move to Twitter, which actually helped our data, our metrics, and our community because we had more data, we had more attention, and generally heightened Twitter interaction or greater tweets or kind of positive sentiment in relation to those tweets. Generally, that adds kind of a compound effect on price action because the speed in which information gets spread is so fast on social media. So that was actually a bit of a boost for crypto, if you ask me, because more people were on the site where the most crypto chatter happens that actually translates into price action.
And that's interesting. One last question I want to ask you was Bitcoin now hitting $1 trillion. Hasn't seen that level since May. But the crypto market cap overall has passed that psychological $2 trillion threshold. It's been above $2 trillion since about October 1st and a couple times throughout the year. And I wonder, we are seeing greater searches for Bitcoin dominance. So I wonder if that shift has similarly been seen on your side, that people are interested in alts, Bitcoin dominance going down. Have you seen anything on that trend?
Yes, so funny you mentioned that because actually every Friday I write research to the Trade the Chain community that primarily focuses on Bitcoin dominance in relation to both Ethereum dominance as well as others dominance, which are basically a basket of altcoins in the market. So 2 weeks ago, we predicted that Bitcoin dominance was going to rise, which generally signals strength in Bitcoin compared to other coins on the market. That happened. I believe Bitcoin dominance is up around 1.5, 2 percentage points in about a 14-day, 17-day period. And we've seen Ethereum and others dominance drop in that time period. So our analysis weeks ago was that buy Bitcoin because it looks like it's going to be the stronger asset moving forward. And now that we've got some ETF information that seems to be sprouting up, it does seem that Bitcoin is the stronger and most desired asset. So we're predicting that, potentially as Bitcoin continues to ink up maybe 1 percentage point higher, maybe 1.5 percentage points higher in terms of Bitcoin dominance, that's when things will start to kind of calm down. And then it'll be time to look at altcoins. So I actually put out some information today that said, start looking at the altcoins you want to buy, but definitely wait for a few weeks for Bitcoin to signal its next moves as we assess what dominance means for the impact on various price action. But currently, Bitcoin does look to be the strong stalwarts, and it doesn't seem to stop or want to stop, at least in the next week.